Happy New Year, everyone. We're kicking off the year with a listener request, a deep dive on some hot stocks for 2025.
Always a fun way to start the year.
Yeah, and talk about timely. The Motley Fool published an article just yesterday, December 31st, 2024, and get this, it's titled, Three Hot Stocks That Can Double Again in 2025.
Double again. That's pretty bold. It sounds like they're banking on some serious momentum.
Right. And, for anyone who's maybe not familiar, the Motley Fool's been around since 1993. They focus on making investing more accessible.
Yeah, I've used their site a few times. They've got tons of resources, both free and premium. Definitely worth checking out.
Millions of people use their services every month. The author of this article, by the way, is Rick Munaris. He discloses that he doesn't have any positions in these stocks, just to be transparent.
Good to know. Always appreciate that transparency. So what's the article's take on the overall market? It was a pretty wild ride in 2024, right?
Oh, yeah. It sets the scene by mentioning that over 100 stocks with market caps over $2 billion doubled in 2024.
Wow, that's a lot of growth. It makes you wonder, what were some of the unexpected winners?
Well, the article actually highlights a few unlikely winners, like a legacy airline, believe it or not.
An airline. Really? Wow, that's surprising after the past few years.
Yeah, and an online dating app, and even two Argentinian banks.
Interesting mix. It definitely shows that the market can be unpredictable. So where are we starting our deep dive? What's the first stock on the list?
So first up, we're looking at Reddit, ticker symbol RDDT. Now get this, their stock surged an incredible 387% in 2024.
387%. That's massive. What's fueling that kind of growth?
Well, they nearly quintupled since their IPO back in March.
Okay, so a recent IPO with that kind of performance, it seems like the market has a lot of faith in their future.
Yeah, the article argues that, the faith is justified. I mean, for those who might not be super familiar, Reddit is built on this community of communities concept. They've got these really passionate users, but they're also known for being pretty resistant to monetization.
Yeah, Reddit's definitely got a unique culture. But is that resistance to monetization a concern for investors?
Well, early on, it kind of seemed like it might be. I mean, the revenue growth slowed from 38% in 2022 down to 21% in 2023.
So a pretty significant slowdown. I can see why some people might have been skeptical.
Yeah, some people thought the IPO was maybe just an exit strategy, cash out while they could.
Yeah, the classic cash grab. But that doesn't seem to be the case here.
Not at all. 2024 saw some serious acceleration, 48%. 54%, and then a whopping 68% year-over-year increase in each of the first three quarters.
Okay, so they turned things around. But revenue growth doesn't tell the whole story. What about profitability?
Well, here's the thing. They actually reported their first profit outside of Q4, and they exceeded analyst expectations, too.
Wow, so they're not just growing, they're actually making money. That's got to be reassuring for investors.
Right. But, and there's always a but, the article does point out that Reddit stock is trading at 224 times forward earnings.
224 times forward earnings? Yeah, that sounds pretty high. I mean, that raises some questions about sustainability, doesn't it?
It does. I mean, is the current valuation justified, or are we looking at a potential bubble? Good point. But the author believes that, the momentum is on Reddit's side. They keep beating earnings projections. Their user base is growing like crazy. 97.2 million daily active users, up 47% year over year.
Okay, so they have the users and the growth. That's definitely attractive to investors.
Yeah, and there's this whole other aspect. Half of Reddit's users are actually outside the U.S., but get this, they only generate 17% of the ad revenue. Imagine the potential if they can tap into that international market.
Yeah, it's a huge opportunity. But it also presents some challenges, right? I mean, expanding internationally isn't just about translating your website. You have to navigate cultural nuances, local competition, different regulations.
Right. It's definitely a complex equation. And honestly, the article doesn't really go into detail about how Reddit plans to address those challenges. Makes you wonder, what strategies are they using? How are they approaching this global expansion?
Yeah, some more insight into their international strategy would be helpful in assessing their long-term prospects. But before we move on to the next company, I'm curious to hear your perspective on Reddit's position in the social media landscape. It seems like they're almost bucking the trend, focusing on these niche communities rather than trying to be everything to everyone.
I think you're right, and I think that's actually their strength. They're not trying to be Facebook or Twitter. They're cultivating these passionate communities around very specific interests. And that creates a highly engaged audience, which is incredibly valuable to advertisers.
It's like they're tapping into the power of micro-influencers on a massive scale. Each community has its own set of thought leaders and trendsetters, Advertisers can leverage that to reach very specific demographics.
Exactly. They're not just selling eyeballs, they're selling engagement.
Yeah.
But it's also a challenge, right? Scaling ad revenue across so many diverse communities while also ensuring brand safety and relevance, that's no easy feat. It's a delicate balancing act.
Absolutely. It'll be interesting to see how they manage that growth while staying true to their community-driven roots.
Okay, so we've explored Reddit's meteoric rise. Where are we heading next on our stock picking journey?
All right, let's switch gears and journey over to China for our next company, Qifu, trading under the ticker symbol QFIN.
China. Intriguing. What does Qifu do?
So they're a credit tech platform, and they're targeting underserved consumers and small businesses, primarily in rural areas.
Interesting. That's a market with a lot of potential, but it also comes with its own set of challenges. Access to financial services is crucial for economic development, especially in those underserved regions. Absolutely. And that's where Qifu comes in. They've developed this AI-powered credit assessment system, and it connects these borrowers with, get this, 162 partner financial institutions. The stats are really telling. 81% of their users are in smaller rural cities.
Wow, they're really reaching those underserved communities, and it sounds like they're focusing on a specific demographic as well.
Yeah, 70% of those borrowers are under 40.
That's smart. They're tapping into a young, digitally native generation in a rapidly developing economy. Could you tell me a little bit more about this AI-powered system? How does it work exactly?
Well, the article doesn't get super technical, but it mentions that the AI analyzes a variety of data points like transaction history, social media activity, and even psychometric data.
Psychometric data. That's fascinating. Using alternative data sources like that is a growing trend in credit scoring. It allows for a more holistic assessment, especially for individuals who might lack a traditional credit history.
And it seems to be working for them. While their revenue growth was kind of flat in 2022 and 2023, it picked up in 2024.
Okay, so they're showing signs of growth. But what really matters in the long run is profitability. Are they making money?
That's the thing. They've been profitable for the last 6 years.
6 years. That's impressive, especially in the fintech sector, where a lot of companies prioritize growth over profits, at least initially. It suggests they found a sustainable business model.
Right. And the article highlights this profitability to address those concerns investors often have about Chinese stocks.
Yeah, there's often a perception of risk associated with investing in Chinese companies.
They also point out that Qifu has been aggressively buying back stock, and they've more than doubled their dividend in the past 3 years. And get this, the current yield is over 3%.
Those are definitely shareholder-friendly moves. It signals confidence in their future prospects and a commitment to returning value to investors. But, as you alluded to earlier, investing in Chinese companies does come with its own set of risks.
Absolutely. Regulatory uncertainties, geopolitical factors, those can all significantly impact investments in China. It's a complex landscape that requires careful consideration.
Definitely something to keep in mind. Before we dive into those complexities, why don't we move on to the final company on our list? We can always circle back and discuss the broader context of investing in China with a fresh perspective.
Sounds good. So for our final stock pick, we're heading back to the U.S., focusing on Hims and Hers Health. Ticker symbol HIMS. This telehealth company, get this, their stock soared 183% in 2024.
Wow, 183%. Telehealth has definitely been a hot sector, especially since the pandemic accelerated the adoption of remote healthcare solutions. It seems like Hims and Hers have capitalized on that trend effectively. What's their story?
Well, they actually started out focusing on men's health, offering treatments for hair loss, erectile dysfunction.
Okay, so kind of a niche market initially, but it sounds like they've expanded their services.
Exactly. They've broadened their offerings quite a bit. They now offer things like birth control and weight loss treatments. It's like they're creating this one-stop shop for a whole range of health and wellness needs, and it's all accessible online.
That's a smart strategy. Expanding their offerings not only broadens their market reach, but it also positions them as a comprehensive telehealth platform rather than just a niche provider. What does the article say about their financial performance?
They've been on fire. Revenue has grown at least 45% every quarter since their IPO, which was almost 4 years ago. Their most recent quarter saw a 77% year-over-year jump.
77%. That's phenomenal. Consistent growth like that is incredibly attractive to investors. And what about their profitability?
After years of losses, they finally turned profitable in 2024.
That's a huge milestone for any company, especially in a sector like telehealth where you often have significant upfront investment. It suggests they've found a solid product market fit and they're scaling efficiently.
The article does mention some potential risks, though. Things like regulatory changes, increased competition in the telehealth space.
Those are valid concerns. The regulatory landscape for telehealth is still evolving, and the influx of new players could lead to more intense competition. So, while the numbers look great, the future of Hims and Hers isn't without its challenges. Before we move on, I'm curious to hear your thoughts on the future of telehealth as a whole. What are some of the key factors that could influence its continued success, and where do you see Hims and Hers fitting into that landscape?
Well, I think the convenience, affordability, and the accessibility of telehealth is going to continue driving its adoption. I think it's going to become even more integrated into mainstream healthcare. But as you said, those regulatory challenges, the competition, those are going to be big hurdles to overcome. And for Hims and Hers specifically, I think their ability to navigate those hurdles, to differentiate themselves in a crowded market, that's going to be key to their long-term success.
Absolutely. It's a dynamic and evolving sector, and it'll be fascinating to see how it all plays out. Unfortunately, we're running a bit short on time for this part of our deep dive.
Yeah, I agree. Let's pause here for now.
Welcome back to our deep dive into the Motley Fool's hot stock picks for 2025.
Picking up right where we left off, before we get back to Hims and Hers, I want to circle back to Qifu for a second.
Sure. What about them?
Well, you mentioned the whole thing about carefully considering the risks and rewards when it comes to investing in Chinese companies. And I think that's something that, a lot of investors are thinking about. It's a topic that comes up a lot.
Yeah, definitely. Investing in any emerging market, especially one as complex and dynamic as China, there are a lot of things to consider, more so than in established markets.
The article highlights Qifu's profitability. They've been doing really well. And the fact that they're buying back stock, consistently increasing dividends, those are all good signs.
Yeah, for sure. Actions like that usually show that a company has confidence in its future. It shows they're committed to delivering value to shareholders. But you have to remember that financial performance, it's only one piece of the puzzle.
Right. There's the whole bigger picture, the economic and political landscape, all of that.
Exactly. And that's where things can get a bit tricky with China. So how do you actually assess those broader risks? It's a lot to unpack, right?
Yeah, it can feel overwhelming trying to make sense of it all. What are some of the key things to look at?
Well, first, you got to understand the regulatory environment. The Chinese government has a lot of influence on the economy, and regulations can change pretty quickly.
And that unpredictability makes things a bit risky for investors, doesn't it?
Yeah, it definitely adds a layer of uncertainty. Another thing to look at is corporate governance. How transparent are they? How accountable? Those are important factors to consider.
And is it easy to get that information for Chinese companies? I mean, is it readily available?
It depends. Some companies are getting better at being transparent, but it's still an area where there's room for improvement. Yeah. And then you've got the geopolitical risks, international relations that can have a huge impact on investments.
Trade tensions, political stuff, even just global economic shifts, that can all affect things.
Mm-hmm. Yeah, it's all connected. And lastly, you can't forget the overall economic climate. The Chinese economy has been growing like crazy, but it's facing some challenges too, like slowing growth and rising debt.
So investing in China, it's not a simple yes or no decision. There's a lot to weigh, and you have to think about your own risk tolerance, your investment goals, all of that.
Exactly. It's about making informed decisions, not necessarily avoiding Chinese investments altogether, but being aware of the complexities, doing your homework. You've got to be prepared for volatility.
Right. It's a different ballgame. Okay, so we've talked about the bigger picture stuff with China. Let's get back to Hims and Hers now. We were talking about the future of telehealth and their place in it.
Yeah, it's a really exciting sector with a ton of potential. As technology changes the way healthcare is delivered, telehealth is going to play a bigger and bigger role.
The article mentioned their revenue growth, how they're now profitable, all really positive signs.
Definitely. Reaching profitability is a big deal for any company, especially in telehealth where you often need a lot of upfront investment. Shows they've got a good business model and they're growing effectively.
But like you said, there are challenges too. Regulations, competition, that sort of thing. What can you tell us about those?
Well, with regulations, each state has its own rules about telehealth, and they're always changing. Hims and Hers has to be ready to adapt quickly to stay compliant.
So they've got to be flexible and keep up with those changes.
Exactly. And then there's the competition. Telehealth is getting more popular, so more companies are jumping into the market. That means more competition, for patients, for market share.
So how does a company like Hims and Hers stand out? What can they do to stay ahead of the game?
Well, one thing is specialization, focusing on specific services or niches.
So instead of trying to do everything, they could focus on being really good at a few things for a specific group of people.
Exactly. They become experts and tailor their services. Another thing is using technology to make things better for the patient. Better online platforms, personalized care, even AI for initial assessments.
AI, huh? That sounds pretty futuristic. How would that work?
Think about it. A patient goes on Hims and Hers website, and there's an AI chatbot. It asks questions about their symptoms, history, preferences, and then, based on that, the AI recommends treatments or even connects them with a doctor for a virtual appointment.
Wow, so it streamlines the process, makes it easier to get care, especially for people who might not be comfortable going to a traditional doctor.
Right. And then, of course, they have to build a strong brand, good marketing, positive customer experiences.
So it's more than just offering the service, it's building that trust, that connection with patients.
Exactly. Building loyalty is going to be huge for them in a competitive market. If Hims and Hers can do all that, they're in a good position to really succeed in the world of telehealth.
So we've got three very different companies here: Reddit, Qifu, and Hims and Hers. Different industries, different opportunities, different challenges.
It's interesting to see how well they did in 2024. The article thinks they'll keep growing in 2025, but of course there's no crystal ball in the stock market.
Definitely not. Past performance doesn't guarantee future results, and any investment comes with risks.
For sure. People need to do their research, think about their risk tolerance, and if they need to, talk to a financial advisor. It's all about making smart choices.
All right, out of these three companies, which one intrigues you the most? Which one stands out to you?
That's a tough one. They're all interesting in their own way. But if I had to pick, I'd say Hims and Hers.
Why Hims and Hers? What makes them so compelling?
Well, the whole telehealth sector, it's ripe for disruption and innovation. And Hims and Hers, they're all about accessibility, affordability, good user experience. I think they're well positioned to really make waves.
So you're not just looking at what they're doing now, but what they could become, how they could change healthcare?
Exactly. They've shown they can grow, they can adapt, they're expanding their services.
And their brand is strong. People seem to have good experiences with them. That's a good foundation for the future.
It is. But we can't forget those challenges, regulations, competition. If they can overcome those hurdles, I think they could become a major player in the healthcare world.
It seems like such a dynamic space to be in,
Right.
constantly evolving. Okay, what I'm finding really interesting about all three of these companies, besides their specific stories, is how innovative they are in their own ways.
Yeah, you're right. Reddit with their community-driven platform, Qifu focusing on financial inclusion in China, and Hims and Hers using telehealth to make healthcare more accessible. They're all pushing the boundaries, thinking differently.
And that's what makes investing so fascinating, right? Seeing that evolution, the potential for disruption. It's exciting to be a part of companies that are shaping the future.
Absolutely. It's a dynamic and ever-changing world. It takes careful analysis, making smart decisions, and a little bit of an adventurous spirit, I'd say.
Well said. Before we go any further, I just want to remind everyone listening that this is just for informational purposes. It's not financial advice.
Right. People need to do their own research, maybe talk to a financial advisor, make decisions that are right for them, for their situation.
This is about giving people food for thought, not telling them what to do with their money.
Exactly. We want people to explore these companies, think about what we've talked about, and form their own opinions.
Okay, so as we wrap up this part of our deep dive, here's a thought. The article focused on these specific companies, but their success, it makes me think about larger trends that might be shaping the market and the economy as a whole. What do you think?
I think you're onto something there. Yeah, they could be indicators of some bigger shifts happening, changes in consumer behavior, technology, how markets are changing.
Like with Reddit, could their success mean that people are looking for something different in social media? Are they moving away from the big platforms towards these smaller niche communities?
It's possible. We've definitely seen a shift away from the giant social media platforms. People want more personalized experiences, less noise, more positive interactions. They want to connect with people who share their interests, and Reddit gives them that.
And what about Qifu? Focusing on those underserved populations in China. Does that suggest a bigger trend in fintech? More focus on inclusion, and accessibility.
Absolutely. Financial inclusion, it's a big goal all over the world. And fintech companies are leading the way. They're bridging the gap between traditional financial services and those communities that haven't had access before. We see this happening in emerging markets, but in developed economies too.
It's like technology is leveling the playing field, giving people opportunities that they didn't have before.
Exactly. And Hims and Hers, they're a good example of how technology is changing healthcare, making it more convenient, more affordable, and more accessible for everyone.
It's pretty amazing to watch these trends unfold, to see how technology is reshaping everything.
I agree. Those three companies give us a glimpse of the future. Their success could mean that these trends are here to stay, and they'll keep influencing the market and the global economy for years to come.
It makes you wonder what other exciting companies and trends are out there just waiting to be discovered.
It's a world full of possibilities. It's a great time to be an investor, a consumer, and just someone who's curious about the future. We've covered a lot today, though. Maybe it's a good time to take a breather before we jump into the last part of our deep dive.
And we're back for the final part of our deep dive into the Motley Fool's hot stock picks for 2025. It's been quite a journey so far.
It has, hasn't it? We've uncovered some really interesting companies and potential trends. Lots to think about.
Yeah, last time we were talking about how Hims and Hers, with their focus on telehealth, that might be part of a bigger shift in healthcare. Like, technology is really starting to make care more accessible.
Yep. Right. And that trend, it's only going to get stronger in the next few years, I think. More virtual appointments, remote monitoring, all those personalized digital platforms, it's all growing.
So Hims and Hers is in a good spot, but there's still a lot of room for them to grow, right, as technology keeps evolving.
Oh, definitely. And telehealth is just one part of it. Healthcare as a whole is going to see a lot of innovation. AI, machine learning, big data, they're all going to change things in a big way. Diagnostics, treatment, even drug discovery, preventative care.
It's kind of mind-blowing to think about all the possibilities. But even with all that, we can't forget about the human side of healthcare, can we?
You're absolutely right. Technology can do a lot. It can enhance things, make them more efficient, but it can't replace that human connection, the empathy, the judgment that a doctor brings.
Right. It's about finding that balance. Using technology, but not losing that human touch. That's important for the future of healthcare, making sure it benefits everyone.
I couldn't agree more. It's a good reminder that investing in healthcare, it's not just about the money, it's about people's well-being, their lives.
Switching gears a bit, back to Reddit. We were talking about how their success might show that people are looking for different kinds of social media, those niche communities. What do you think is driving that change?
Well, I think people are tired of the big platforms. All the noise, the negativity. They're looking for online spaces where they can connect with people who share their interests, their values, their passions.
So it's like they still want to connect, but in a more meaningful way.
Exactly. They want to have real conversations with like-minded people. And Reddit, with all its different communities, it offers that. It gives people that feeling of belonging, of shared purpose.
And that's valuable for advertisers too, isn't it? Reaching those specific groups, people who are already interested in what they have to offer.
Oh, definitely. It's all about targeting, reaching the right people with the right message. Reddit allows them to do that, and that's why advertisers are paying attention.
We've talked a lot about Reddit and Hims and Hers. What about Qifu? Their success in China, focusing on financial inclusion, it seems like that's part of a global trend, right?
Yeah, for sure. The idea of making financial services available to everyone, it's gaining a lot of momentum around the world. It's not just about doing the right thing, it's also good for the economy.
So it's about giving people the tools they need to improve their lives, to participate in the economy.
Right. When people have access to things like bank accounts, loans, insurance, they can start businesses, they can invest in their education, they can improve their lives, and that helps the whole economy grow.
It's like we're breaking down those old barriers that have kept people from reaching their full potential. And technology is playing a big part in that.
Absolutely. Companies like Qifu, they're using technology to reach people that traditional banks haven't served well. Mobile banking, new ways of assessing credit, digital payments. It's making financial services more accessible for everyone.
So Qifu's success, it's a good sign, isn't it? It shows that we can use technology to make things more fair, more inclusive.
I think so. It's a positive example of how innovation can make a difference.
So we've looked at Reddit, Qifu, and Hims and Hers. 3 very different companies, but they're all doing things differently, shaking things up in their industries.
And they all point to these bigger trends, right? Trends that are changing the market, changing the world. It's exciting to see it happening. It's a good time to be an investor, to see how things are evolving.
Absolutely. Before we wrap up this deep dive, I want to thank you for joining us today. It's been great having you share your insights.
It's been my pleasure. I always enjoy talking about these topics.
And to everyone listening, thank you for being here with us. We hope you found this helpful and maybe even inspiring. As always, do your own research, talk to a financial advisor if you need to, and make sure any investment decisions you make are right for you.
Good advice. Investing should be about making smart choices, not taking unnecessary risks. Understand what you're getting into, look at the opportunities, and think about your long-term goals.
Yeah, I couldn't have said it better myself. Well, on that note, we'll wrap things up for today. Stay curious, stay informed, and happy investing.